Welcome to Lyve Talks, a podcast by Lyve, a tech and logistics company headquartered in Abu Dhabi. On Lyve Talks, we tackle fintech, logistics, business, and best practices in the workplace. I'm Karim Bakhash, the VP of Strategy at Lyve Global, and I will be your host. Welcome to a new episode of Lyve Talks. Today, I have the pleasure of having two guests with me. First, my colleague Nader, who you've seen already in previous episodes, and Markus Thomas, who's the head of investment at the IPO Fund. We're going to be talking today about the Abu Dhabi investment ecosystem and how Abu Dhabi, the Emirate, is trying to attract more companies to come to Abu Dhabi in the aim of IPOing. So before we start the discussion, maybe Markus, if you can give us a bit of an introduction of yourself and what you've been doing.
So I'll keep it brief to go to the more interesting stuff right after. So my name is Markus Thomas. I'm German in origin. I've been in the UAE since 2016, so getting kind of to medium term now, not totally fresh anymore. I've seen a good amount of development here. I've spent some time in the private sector and then transitioned to the public sector, to the government side, starting in the Abu Dhabi Investment Office for a good 2 to 3 years there, also running the investment function. And then we've built out the Abu Dhabi IPO Fund over the last 12 months, I would say. And that's what I do full time now. So very interesting couple of years.
Awesome. Great to have you here. So I guess let's get started. Nader.
Sure. Karim, thanks for having me again. Always a pleasure. And Markus, welcome, of course, and good to have you with us. Maybe we can start a bit talking about the Abu Dhabi ecosystem. You've been there for a while. You and I interacted when I was on the Hub 71, and you guys were in ADIO, and there's a lot of interaction there. So, maybe take us through the Abu Dhabi journey of getting to focus on new sectors, tech sectors, and other sectors. So from your experience, it'll be great to see how that journey has evolved, because we've heard so much about Abu Dhabi. We are clearly, as Lyve, part of the Abu Dhabi ecosystem, as you know. So would love to hear your perspective on how you've seen that evolution take place.
Yeah. No, absolutely. And for everybody who's listening, Nader and I used to work together there on a almost daily basis there on making that what everybody calls the ecosystem now actually happen. So he has driven a lot of that, and now he's leading the charge there. So this is exactly what we want to see there. So thank you for that. I think for the Abu Dhabi, since I came here to where we are today, which is probably actually 6-7 year journey now, has changed completely in its approach and in its in the scale of things. Particularly with the focus driving this ecosystem engagement and bringing companies here. So there's 3 things that leadership has focused on. One is the ease of doing business. And here, everybody who started a company knows that can drive you crazy. But now setting up a business in Abu Dhabi is a matter of days. And the costs for doing it, we've probably cut by 90% or so. And that's a very firm statement from the Department of Economic Development and from leadership in general, that this cannot be the reason why entrepreneurship doesn't flourish here. Over and above that, there was a very conscious decision on building the right institutions. We've mentioned some of them, Hub 71, which this man has basically built to a large extent.
Small part.
Abu Dhabi Investment Office is another one where I managed to have one or two hands in. And that is very concrete. So building the right institution as a landing pad, so you know where to go when you want to come to Abu Dhabi, and then really empowering those services that they offer. That is a very critical decision. So what does it mean concretely? In terms of acceleration programs, ADIO together with Hub 71 has done everything from seed funding to a venture fund to financial incentive packages, wider concierge type of offering that really helps companies go from zero clue of what it means to come to Abu Dhabi to being incorporated with a commercial license, and off you go. So doing that was very important. And while it always seems hard in the beginning, by now, probably the last 24 months there have seen maybe 75 investments, like concrete companies with signed contracts and capital flowing into them. And that is everything from seed stage to the Amazons of this world, Siemens Energy, and other very large cap companies. and also obviously including the powerhouses of what hopefully is the new tech sector and other sectors here like Lyve. So that was one of our greatest achievements, one of our first deals, and we're very proud of that. So that was great. And then thirdly, there's probably something that we're trying hard every day, and it's been going well, but obviously there's more to come, is speaking with one voice. Because how to Abu Dhabi is very important, to have a consistent message, to have all the institutions linked to each other, speaking to each other, exchanging thoughts, and giving the same consistent feedback to the outside world. It's very, very hard, but a lot of people spend a lot of time doing that, hopefully right. So
no, absolutely. And to us, getting into that ADIO program was quite a milestone, and we're proud of that, and we've seen how that unlocks so many doors within the Abu Dhabi ecosystem, which is a massive ecosystem on many fronts. But again, back to your experience on working with so many companies who are coming into Abu Dhabi, what do you think resonates the most with these organizations? Is it access to some capital? Is it more on the market side? What do you think resonates, or was it different needs for different companies of different sizes? But what have you seen the trends so far?
So the very exciting part there is, as we just discussed about how the ecosystem evolved, so has the perspective from the outside. The Middle East was always primarily a funding destination. You come here, you tell a good story, you get funded, and off you go and build your business in Europe, the US, and Asia. Now that has changed almost completely. Abu Dhabi specifically remains probably one of the most competitive funding markets across all stages of the life cycle. And that's not going to go away. But people and companies come here now for other things. So stability and connectivity is very important. It's not only the banking system, tested court systems. It's connectivity, i.e., the slogan of 8 hours to anywhere.
Yeah.
And that actually makes a difference when you're building a business, particularly in emerging markets. So we see a lot of that push. Then we see, as I said, the funding is still there, obviously. And then there is what I call a business opportunity. Different from market opportunity. So business opportunity as in you can now speak to almost any relevant decision maker from around the world in the UAE, much easier than you can, I'm going to say it, in New York or in London. Oh, big statement, but it's very visible that if you want to talk global business, specifically emerging markets business, this is the right place to be. It's not only during events like Abu Dhabi Finance Week and others, but on an everyday basis, this is becoming more the reality. And then the market opportunity is absolutely there as well. The UAE itself is, particularly for kind of tech-enabled business models, it's a perfect hunting ground. High disposable income, very strong tech affinity, and Saudi just next door. So there's a big opportunity there as well. So we see a lot of local market, regional market, and then kind of conquering the wider region, which is for us MENA, and often, and this is interesting, also EMEA. So we see a lot of companies set up their first international headquarters in Abu Dhabi because of everything we just said. We see a lot of kind of EMEA or MENA headquarters or full headquarter moves. So those are things that people come for. And I've recently seen this as a talent push. It used to be always, if we land here, can we find enough talent? Now it's the other way around. Now the senior management, they want to be here. The top engineers, they want to be in the UAE for lifestyle reasons, for taxation reasons, particularly if they think they're actually going to do a good exit. So they want to be here. And now the companies have to answer why they're not here. That's very, very interesting.
Yeah.
You mentioned something while you were discussing the whole Abu Dhabi ecosystem about aligning the messaging that is coming out from the Emirate to the companies, to the world. But how do you align these different stakeholders? I mean, there's multiple stakeholders within Abu Dhabi that are involved in what you do. So how do you make sure everybody is aligned internally?
Yeah, it's not an easy one, but if you know the governance structure of Abu Dhabi, it's at the top, it's quite centralized, and leadership there is very much aligned. So there's basically one thought process that drives the activities of all the different departments, including then the GREs, the sovereign wealth funds, to have one central vision, we're pretty good at writing that down. It's kind of the Abu Dhabi's kind of economic diversification strategy, and then a lot of other things kind of are derived from that. That takes a little bit of time. So what's day to day is very important is, and we used to do this on a weekly basis or even more, is the simple fact of communication. You have to be on the phone, you have to have regular cadences, and we have that. In ADIO, we had that with probably every sovereign platform in the Emirate. We do the same thing with the relevant ones in IPO Fund now as well, and that's how it works. So we built that, the regular cadence, and then luckily there's also a lot of social network going on, like private communication, that everybody has a rough idea of what the other guys are doing. And then where there are overlaps, make sure we're aware, and where there are blind spots, then come up with a good idea. And that's really also how the IPO Fund came along.
Good. I mean, this is a good intro on what you mentioned, like the IPO Fund, right? So can you describe a bit more about what is this initiative and a bit of historical of how it started and where you're at now?
Yeah, it's quite an interesting one. So if you think about, we talked a lot about the Abu Dhabi Investment Office and attracting companies here, and usually the bulk of that program is a kind of in a Series B type situation.
Correct.
So like Lyve was when it came on board, and then ADIO is with them for 3 to 5 years to help them grow, help them on the funding side, on the kind of door opening side, and then what? So we had to kind of answer that question, and leadership strongly believes that is part of that answer is in building functioning capital markets with kind of 3 core objectives. Number 1, logically following is, where do you raise institutional scale capital to fund the next growth steps? The answer is an equity market. The second point here is to really long-term attract what really makes an ecosystem successful is things like repeat entrepreneurship, second-time founders and these things. Right. But for that, you need to put money in their pockets, right? So you need to crystallize value. You need to provide liquidity for early investors, for founders, for employees out of the stock option plans. So again, you need a functioning market. And then thirdly, if you look at the wider region, a lot of wealth is tied up in things like real estate or other illiquid assets. So if we can use the quality companies that we've brought here and the local incumbent ones to create diversification targets for more sustainable, safer, diversified investment portfolios, then you have a really good reason to do a lot of updates. So, and this is probably 18, 24 months process, where leadership has gone through the federal and the Emirate level to update the company's law to make IPOs much more palatable, update the way that the regulator, ESCA and ADX work together. They're now on timelines, SLA-type timelines that are measured in days, not in months or unknown periods. They've redesigned a lot of of which responsibility sits where with the regulator, with the stock exchange and elsewhere, to make it much more efficient and very similar to international markets. So that was a big update on the software side. And then when you think about the hardware part, then the idea with the IPO fund is to show dedicated capital. So now, hopefully, everybody knows that there is a very clearly dedicated team that does nothing else but drive IPOs, and we get in a second to what that means and how we do that. That is well funded, so it's a 5 billion dirham, $1.5 billion fund that is focused exclusively on new issuance on ADX, IPOs, or a few others, and we come to that. So making that capital available hopefully does, and we see positive signs already, does a lot of things to the ecosystem. All of a sudden, you have a much de-risked IPO process from the regulator and everything we discussed, but it's also much easier to motivate investment banks, law firms, accounting firms to work on these transactions, because by nature, they're not as large, at least not the government ones, not as large as transactions in New York or elsewhere, but they're sizable. So to get the staffing for that, you need to de-risk the fee probability, right? So having dedicated capital that is pulling the deals makes it much easier to get the right staffing, for everybody to build bigger teams, to then ultimately provide better service to the companies that want to go public, get more investor attention on it from international sides, and kind of getting that flywheel started is important. But someone needs to be there to say, we want to see the IPOs, and we're good. If they're underwritable, we're good for it. So that is the ambition. So that's what we're trying to do.
And then specifically now, the fund that you guys manage, the 5 billion dirhams, where does it come into the IPO journey, do you think? And when does it exit, if it does, from that investment or from that opportunity?
Yeah. So there are 3 kind of core products, contact points that we've developed to tailor to slightly different target audience. The overall mandate is a global one, but there's obviously a strong focus on the local and regional businesses, also the ones that are already here. Think family offices, or family office is the word we use in the UAE, but conglomerate is probably the right word. And that is, to those we tailor with something we call advisory. So there's a separate team that picks up these companies, say 24 months before a listing event, and helps the principals structure the advisory process. Right? We're not here to compete with kind of leading financial advisors, banks, lawyers or so, but we're there to do what I call meta advisory, right? To prep the principal on how to structure the project, run the procurement process with them, introduce the right advisors, and push that through. Because there's a lot of massaging that needs to go on there. There's a painful transition from a privately run company, say you're 40 years in the business, you have 10,000 employees, you've obviously done relatively well, and now there's someone coming in telling you that you have to do everything differently. There's a lot of massaging going on there. So that's a very important task, and what comes out is hopefully a transparent, well-structured, operationally, financially, governance-wise business, key employer in the region that has public market ambitions. If they don't want to go public, because we don't tell the families what to do, right? Then it's still a well-governed, well-structured, large-scale employer. So from that end, that's one of the streams. Then the other one that I'm heading is the investment side. So here we do a lot of inception work. So we go around, again, this is a global mandate, and speak to companies and put in their head the idea of an IPO, on ADX, and help them spar that idea. The moment they kind of mature a little bit with the idea, we then introduce the right investment banks, the right lawyers and others that we know have sector expertise, that we know are focused on this type of transaction, and very importantly, that we know have capacity to actually execute. Then with that initial equity story approach and the right advisory team, usually things go a bit quiet for us. The companies come back to us 4 months later or so, 6 months later, and we then want to be the first in that in the investor sounding. So it makes a lot of sense to come to us first. We'll be brutally honest. We'll say things that your bankers will not say to you, because they have to manage a client relationship. But our sole objective is to make sure that when you go public, or when you touch the public investor in the first contacts, you're ready for that, and the story sits well. So we've hired a very institutional team that can provide that very credibly, provide that feedback, and we'll take the second meeting, even if you mess up the first. So that doesn't happen if you go elsewhere. So from that side, we want to be in that process as much as we can. We'll also make sure that in Abu Dhabi Inc., and this is back to your question on how does it all fit together, we'll make sure that the processes are in front of every relevant player. Doesn't mean they will do what we do, doesn't mean that they will engage, but at least they know the process is running, they know when it's going to conclude, they can line up their investment committees, because that's really hard, and they can line up their analysis and everything to make sure that they have a view when they have to have one. Obviously, we also then collect feedback from them to relay to the company, to its advisors, on what do we need to do to make this a success. So we hope that there's a lot of value add from there. Now, this is probably the time then when the processes go and touch the regulator, go touch the exchange, and when that kind of institutional engagement comes to roadblocks, we have a separate team, and this is the third vertical, that focuses only on engaging in that moment to make sure that there's no translation issues, everybody understands each other, and we can, as an ecosystem, find the right outcome. That's probably worth more than advice and worth more than money, is the getting the communication right there. It's very high value add. Hopefully
that communication is between which stakeholders specifically?
Think about the company and their lawyers, and ESCA as the regulator. New company structure, a different type of balance sheet and P&L that might look different from what they expect usually, a different type of governance structure, or so that they need to get their head around, because these guys are really busy.
Yes.
So there's a lot of people wanting a lot of things from them. So our job is to make the message clear and get them on board with that.
Okay.
So exchange, regulator, central bank if required, and a few others. So that's that. Now, when it comes to the investment side, then currently, given how the market is going, we'll play in the public book building process. We want to be there with a significant order early. Expect that order, based on the guidance we've received from His Highness, to be somewhere between 10 and 40% of the offer size. So very, very chunky. Order comes in early to drive the momentum, drive the sentiment. But ultimately, if there's enough demand from the private side, we're not there to crowd out private investors. So we can be allocated down. We're not going to fight for it. So that we think we can support. Now, once we're there, to answer the question, once we're there on the cap table, we're going to be there passively. We don't want to sit on the board. We don't want to tell anyone how to run their business. We'll not waive our governance rights, but we'll play it supportively. It's probably going to be a 2 to 3 year horizon. On exit, we'll be profit conscious, not obsessed. So we'll focus on not ripping big holes into trading volumes or into prices. And if there's a monetization transaction, it's likely going to be to diversify or provide free float rather than a block trade. So think about it going to, in an accelerated book build type fashion, to a wider book rather than larger blocks.
Okay.
So that's the plan. Let's see what happens.
Well, it's interesting because then not only is it a fund, but it's also the whole facilitation, education, hand-holding in a bit, right, to get them to that very complicated process all the way to an IPO and a successful one, hopefully. You touched on who or what kind of companies you talk to for these things. So you mentioned the conglomerates. I think that's a no-brainer. But then you also talked about companies who might be outside looking to explore an IPO in the next 12 to 20 months, 24 months. Where do the, let's say, the potential unicorns or the up-and-coming companies out of the region fit here, and how do they think of this as one opportunity?
Yeah, so we are very, very focused on private companies because, frankly, the companies that come out of Mubadala or ADQ or others, do they really need our support? Probably not. So those are well-run businesses at scale. They don't need us. So we're focused on private businesses that ideally in new sectors, and we do a lot of work in developing new sectors with ADX, with the regulator, to adjust the listing regimes to allow things like biotech, things like tech companies, unprofitable tech companies is not kind of covered at the moment. So we need to kind of make the case for exemptions there and these things. So that is clearly the target. We want to diversify the exchange. So we want to see classic tech sector listings. We want to see biotech. We want to see other sectors that are not represented, and we should be there to be the kind of the vote of confidence that this is a good idea. So I expect that in the next kind of 12 to 18 months, I do expect that to happen on multiple fronts, and that will be a very, very important deliverable to have a proper, typical growth tech company list. That will be very exciting.
So you've mentioned this as probably an aspirational goal already. You also mentioned 5 billion as the fund, but is there any other inspirational goals that the fund have set for the next few years that you also have in mind, that you always keep as a?
So it's this is the point where we talk about numbers. This is when the comms guys usually say, "Don't talk about numbers." But we'll stick to what the initial press releases sanctioned by the media office say, and the spirit is very clear. So last year we had in the UAE we had about 10 IPOs, 5 of them on ADX. So the job is to build an equity culture and to keep the momentum going. So we obviously expect not less, but to match at least last year and grow from there. I'm very, very confident on that.
Okay.
Again, private companies, new sectors, what seems to be the more difficult stuff that is not just a dividend playing, ultra large cap government owned business. That is really the ambition. So
Okay.
that's what we're going for.
I mean, no, it wasn't about just having numbers, obviously, but that could be an aspirational goal. It's diversification of the exchange, going into places where not usually the exchange would go. So that is fair as an answer. And how did the exchange align to the new trends of IPOs? Because there's new trends in going IPOs, especially in the we hear a lot of them in the US, but. Is there any alignment on these new trends from the exchange?
So absolutely, and it's a very, very agile team there. And when I say team here, I mean probably a trifecta of the exchange itself, ESCA, the regulator, and hopefully ourselves, if we can keep pace with those guys, has a very open ear. So we're out there talking to companies, talking to investors as well, because both sides have their own issues on what do we need to change to continue this or make it bigger, better, faster. And one key outcome here was, for example, the I know it's a bit difficult word these days, but the SPAC regulation. So that was a lot of the thinking, a lot of the drafting was done in our team, and then obviously discussed and sounded with the other teams, and then ultimately driven and adopted by ESCA. So that's a classic outcome. We focus on building other asset classes on top of just straight equity as well. And that will then drive a lot of different types of investor participation. So making those things possible is absolutely critical. Because particularly when you're going after the big institutional international investors, it needs to look like what it looks like elsewhere,
of course,
or at least be that efficient or more. So there's a lot of things to be done there, and there we've seen really leadership turn around very quickly. And that's very encouraging. So
and then I'm sure as you've designed this and as you continue to execute it, you're always having to look at the regional picture, right? Because IPOs are something of interest across several markets, Saudi, other markets in the GCC and beyond. How do you what's your view on what's going on in the regional IPO market, and then how does Abu Dhabi? Clearly, we've heard a lot about how clearly Abu Dhabi is providing programs and incentives, but how does Abu Dhabi look to compete and be different in this regard?
Yeah. So luckily, and it's I wish I could say it's all our doing at the IPO Fund, but the Middle Eastern IPO market is just completely off the charts the last 18 months, I'd say, which is the exact reversal of what happens all around the world. So looks really good. Yeah, it looks really good.
Enough work for everyone. That's the answer.
so that is very good. We do think that is a structural tendency, given how well, because it's not only the market, right? And I think ADX was one of the best performing stock markets last year. But it's not only the market, it's also the economies are delivering. There is now that critical scale of kind of self-driving kind of domestic economies. We're just over that cusp and driving that. So the growth is there. So you're not necessarily pricing fantasy. There's actual growth that you're pricing, which is not necessarily the case elsewhere. Mm-hmm. So it's a structural tendency. Then there's also a lot of kind of pent-up demand because of the relative scale of the exchanges, right? There is, how many companies are listed in New York? 2,000, 3,000. So we're just about the 80 mark on ADX. So anything you add to the market mix here, there's a lot of demand just to diversify out of other asset classes and other investment products. So the demand is going to be there, and I think average oversubscription level last year was somewhere around 30 times, and that's completely crazy.
It's crazy.
So that is there are technical reasons where those come from, those levels, but even at a 50% haircut, it's still pretty strong. So that's the overall market, and that's the same for Dubai, Abu Dhabi, and Saudi. Ultimately, scale and liquidity make a big difference there. So where the hierarchy at the moment, according to the numbers, is also Dubai, Abu Dhabi, Saudi, and non-liquidity as well. Now, ADX has quadrupled liquidity in the last 12 to 18 months, and that is due to kind of appearance of market makers, of more transparency and just more scale. So that's something where we're developing very strongly. And then in the back end, without boring everyone with too much technical detail, but it's the question of how can large-scale allocators actually participate here? It's the question of kind of single account orders versus kind of pooled accounts and these things, without being too technical. But there you can differentiate, and we've seen this recently in Americana Restaurants was a very successful dual listing, and in Saudi and ADX, and there were very clear differentiations between for who does the Abu Dhabi system fit better, for who does the Tadawul system fit better, and making that happen was a big learning. So there, I think we can be competitive.
It doesn't have to be 0 or 1, right? It could be a mix of solutions, like you said.
Yes.
So then, on that, what's the split between retail and institutional investors, if you have such a figure, and is it in line with other markets, or do we still need to develop one or two or both?
That's an excellent question. Usually at the offer stage, we around here have about a 10% retail tranche, and that subscription mechanism is very different from the institutional tranche, and that's on the offer side. On the trading side, retail is very, very strong. There's a lot of volume coming through, even more so in Saudi. There's a lot of very fast retail trading.
Okay.
Institutional tranches are usually split between, I want to say, regional institutions and international ones. And the international tranches are becoming larger and larger. They're very, very well bid. And there's also an interesting cross dynamic between the international tranche is always looking over to the kind of the Abu Dhabi tranche to see in case there's enough support. And that's also why we exist, right? And then from our side, from the Abu Dhabi side, is always how are the international guys pricing this? So there's a very interesting cross fertilization. Hopefully, can also go the other way. Yeah. So, but that's very interesting when you see on the analyst calls and on the briefing sessions who dials in. It's very interesting. It's very interesting who puts a lot of effort there. So we can always have more trading liquidity. But all of the pools are developing really well.
Nice.
But again, there's never enough liquidity, and we have no illusion that we're going to rival NASDAQ for volume supremacy anytime soon. By year end would be great, but we'll take that up with leadership.
I think the liquidities are there, the zeros are there, I'm sure, but we just need to channel them to the exchanges. To be active investors on ADX and other exchanges, but I'm sure the zeros are there, and we know there's a lot of liquidity in the region in general, but are they going towards the ADX or going towards exchanges? That's the question. So Markus, you know clearly that most of the exits in the region have been acquisitions or trade sales, correct? The Karims, the Souks, and those guys. IPOs can be super exciting because that means, the autonomy stays instead of exiting to a bigger player who comes and might change or not change things. And it's very exciting for the team, very exciting for the employees because they see bigger upside and they can see a lot of more potential for the company when they are, at an IPO level. How do you, what do you say to a company that's maybe looking at an exit in the next 2-3 years, and how do they put the IPO into their radar? What are the kind of broad lines that they need to think about as they consider that option?
Yeah, so it's a very interesting kind of crossroads for the company, and it's very practical difference that you can make or should make if you want to make it efficient, but also in the thinking. So the private market investor, the people that you're creating value for, are very different in terms of their thinking, in terms of their mandates, what they have to deliver by when, from the public market investor. So start with thinking about, how do I make my equity story, which is kind of your value creation path, understandable in a very short period of time, in writing. Maybe you don't have a chance to voice over to everyone because there's going to be 5,000, 10,000, 100,000 shareholders in the future, not just 5, 15 or so. So make sure that it's very clearly distilled. How do you create value? Then make sure that the external analyst who has never met you is able to find that in your numbers work. So you probably have to structure the corporate and its divisions in a way that it matches the value creation and it matches then ultimately the number work behind it, so that you can point to a almost complete stranger that this is how we create value in this vertical, and this is the governance structure around it, how we exert kind of influence over driving these value creation factors. Sounds like an esoteric exercise, but it's very, very, very different from a much more engaged hands-on model. So if you start adopting that thinking, you'll naturally grow into that setup that is then ultimately IPOable and understandable by the public market. And then it's a very, as you said, it's a very exciting route that allows you to be around with the company for longer, while potentially staying your own boss.
Well, thank you very much for being our guest, Markus. It was very insightful to hear about Abu Dhabi, the investment ecosystem. Thank you also, Nader, for coming along for this episode. That's it for today. Thank you, everyone, for joining, and see you next time.